our trader rundown today, we have Dan Deming of KKM Financial here to kick it off for us today. And Dan, the beautiful thing about this week is it is a holiday week, so less trading happening.
Yeah, well, volumes typically are reined in a little bit here. You don't see the activity that you see during a normal week. However, you know, we're coming out of a big move here in the market, and we do have a few things that the market will be focused on this week as well, particularly when you look at the Fed minutes coming out on Wednesday before the close on Wednesday.
That is going to be interesting because, of course, the market's closed on Thanksgiving Day, and then there's a half trading day on Friday. And I think that people will probably just sit it out. Some traders like to come in, and when there's fewer traders, all of a sudden you see these big sizable moves happening in the market because they can push it around.
There's less liquidity. If there's some market moving news, that the lower liquidity can be exacerbated, you know, in the market moves.
Now, what do you think about the rotation that's been going on? Does that continue into this week?
Well, it feels like it probably does, because we saw again last week that money flowing out of the bond market. There's a lot of concern there now when you're seeing the yield curve shifting as dramatically as it has, and you're seeing that money either going into cash, but certainly the market performed fairly well throughout the week and finished near its highs. So you're seeing, I think, some of that money flowing back into the equity market,
back into the stock market. So does that mean that money is leaving the safe haven and coming back in, ready to take some risk?
Yeah, yes, that's I think partially definitely the case here. Also, when you look at what's going on in the bond market, there's a great deal of concern that now that we've seen such a dramatic move, and bonds have been one of the better performing asset classes the last couple of years. It's actually been kind of almost a stock replacement theory there, is because bonds have performed so well, that now there's some concern that if you've got long-term exposure to some of these bond holdings, that you may never see your principal come back if some of these holdings are dropped, if they stay at the levels where they currently have fallen to. You're seeing price of bonds drop dramatically, yields jumping dramatically in the last 2 weeks.
Anything else you're watching this week?
I think the financials as well, because of the outperformance there, and again, we'll see how this whole Fed thing is interpreted. Another thing that we're watching closely is the dollar. Dollar now over parity against the euro, very, very strong. Could serve as a headwind for this market moving forward when you look at the earnings cycle coming up.
Sure.
However, overall, the market's still betting on the fact that there's going to be some inherent growth here over the next couple of quarters, particularly if any of these infrastructure plays actually manifest themselves and are initiated. So that's why I think you're seeing again this rotation, but the market's still betting on economic strength coming out of this current environment.
Dan, thanks so much for coming on our show, and enjoy the short trading week.
Well, thank you. Thanks. Happy holidays to everybody this week, and we'll enjoy the 3-day week.